HBAR just hit wave 3 of its Elliott wave structure, and we're looking at targets of 39 cents. That's a potential 56% explosion from current levels. But wait, there's more. Ethereum whales just dropped another $40 million while most retail investors are sleeping on what could be the setup of the century. Make sure to watch this video entirely until the end, because this could change everything for both HBAR and ETH holders. What's going on, Gold Rush family? Goldrush here, and welcome back to Gold Rush Crypto Daily, where we break down the hottest crypto moves before they happen. Today we've got two absolutely massive stories that could send your portfolio parabolic. We're talking about Hbar's technical breakout that has analysts going crazy, and Ethereum's whale accumulation that's pointing to a mind-blowing $4,900 target. This is going to be a high-energy ride, so smash that like button right now, and let's dive into these game-changing setups. All right, crypto warriors, let's start with this absolutely fascinating article from Brave New Coin about HBAR. This could be the technical setup we've all been waiting for. According to this analysis, HBAR is drawing renewed attention following a technical pullback that may set the stage for a major rally. With HBAR price near 25 cents, analysts view this zone as a possible accumulation area backed by Fibonacci and Elliott wave signals. Mark my words, when the big money starts accumulating at these levels, magic happens. Crypto analysts have outlined bullish setups, indicating that HBAR could be entering wave 3 of a 5-wave bullish cycle with price targets ranging from 31 cents to 39.7 cents. Wave 3 is typically the most explosive wave in Elliott wave theory, and this setup is looking absolutely massive. Now here's where it gets crazy. Crypto market analyst Big Mike 7335 published a chart suggesting HBAR is entering wave 3 of a 5-wave Elliott structure. The token rebounded from 25.33 cents after breaking out of a falling wedge at key Fibonacci levels. The chart places the next wave 3 target at 35.12 cents, with wave 5 projections extending as high as 39.79 cents. We're potentially looking at a 60% move from current levels if this Elliott wave count plays out. HBAR previously reclaimed the 0.618 Fibonacci level before revisiting the breakout zone. If this structure holds, we could be witnessing the end of wave 2 and the beginning of wave 3. According to WSB trader Rocco, the recent price decline has presented a potential accumulation opportunity with a bounce formation near 25 cents. This cup-shaped structure in lower time frames is exactly what we want to see before explosive moves higher. Now let's pivot to Ethereum, and this story from AMB Crypto is going to blow your mind. The headline reads, "Here's why Ethereum could hit $4,900 before retail FOMO starts." And when I read through this analysis, I knew we had to cover it immediately. According to this article, Ethereum may be hovering close to its March highs, but there's so much more runway ahead. On-chain data shows unrealized profits remain surprisingly low, meaning traders haven't cashed out just yet. This is absolutely crucial information because it tells us the smart money is still holding tight. But here's where it gets insane. One Whale Wallet clearly agrees with this bullish thesis, dropping another $40 million into ETH as part of an $800 million spree tied to SharpLink Gaming. $800 million. That's not plain money. That's institutional-level accumulation that tells us something massive is brewing. Let's dive into the technical analysis here. According to Glassnode, ETH's relative unrealized profit metric is currently hovering just below the +1 standard deviation level. Now get this. Back in March when ETH hit $3,980, this metric had reached +2 sigma, showing much higher levels of paper profits across the network. The takeaway? Despite the rally, most holders haven't taken significant gains yet. If ETH were to revisit that +2 sigma level now, it could point to a potential price target around $4,900. That's a 23% move from current levels, and we're talking about the second largest cryptocurrency by market cap. Now let's talk about this whale activity because it's absolutely mind-blowing. A crypto whale just dropped another $40 million in ETH through a swap with Galaxy Digital, all routed to SharpLink Gaming. The wallet, tagged as 0xCD9, has now sent over $800 million in ETH to SharpLink. making the company one of the largest Ethereum holders in the world. As you can see in this data here, SharpLink holds more ETH than even the Ethereum Foundation itself. Only two other names, Bitmine and the Ether Machine, sit ahead. When entities are accumulating at this scale, you know something big is coming. But here's perhaps the most bullish signal of all. Despite Bitcoin soaring and altcoins staging impressive rebounds, mainstream curiosity about crypto remains surprisingly muted. Data from Google Trends and Wikipedia page views shows interest levels are nowhere near past cycle peaks. According to Alfractal, this lack of retail buzz could actually be a bullish signal, suggesting the market hasn't entered its euphoric phase yet. With fewer people Googling what is Ethereum and how to buy Bitcoin, we may be in a calm before the FOMO moment. Think about this logically. We're seeing massive institutional accumulation, technical breakouts forming, and yet retail interest is practically non-existent. This is the perfect storm for explosive moves higher when that retail FOMO finally kicks in. Now let's connect these two stories because they're telling us the same thing from different angles. Both Hbar and Ethereum are showing technical setups that suggest major moves are imminent. Hbar's Elliott wave structure is pointing toward wave 3, historically the most explosive wave in any bull cycle. Meanwhile, Ethereum's on-chain metrics and whale accumulation are screaming that we haven't seen anything yet. The common thread? Smart money is positioning while retail is distracted. This is exactly the kind of setup that creates generational wealth for those paying attention. We're potentially looking at 50 to 60% moves in Hbar and 20 to 30% moves in Ethereum. And that's just the beginning if these technical patterns play out. Let me be crystal clear about where I see these assets heading. For Hbar, if the Elliott wave count is correct, we're looking at initial targets of 31 cents, with extension targets reaching 35 cents and potentially 39.7 cents. From current levels around 25 cents, that represents upside potential of 24 to 58%. For Ethereum, the path to $4,900 is becoming clearer by the day. With whale accumulation at these levels and unrealized profits still relatively low, we could see this target hit faster than most people expect. That's approximately 23% upside from current levels around $4,000. But here's the kicker. Both of these moves could happen simultaneously as we enter the next phase of this crypto cycle. When retail FOMO finally arrives, these percentage gains could look conservative. If you're getting value from this analysis, make sure to absolutely smash that like button. It helps the algorithm push this content to more crypto warriors who need to see these setups. And if you haven't subscribed yet, what are you waiting for? We're dropping daily content that could change your portfolio forever. Turn on those notification bells because timing is everything in crypto. And when these breakouts happen, you want to be the first to know. Share this video with anyone who's serious about crypto because these opportunities don't come around every day. Look at this data one more time. Hbar sitting at a critical Elliott wave juncture with wave 3 targets that could deliver 50+% gains, and Ethereum whales accumulating $800 million worth while retail sleeps. This isn't financial advice, but if you've been waiting for clear technical setups backed by smart money flow, this could be your moment. The crypto market is setting up for what could be the next major leg higher, and both Hbar and Ethereum are positioned to lead that charge. Keep your eyes on these support levels, because if they hold, we could be talking about these levels as launch pads in just a few weeks. That's a wrap on today's analysis, Gold Rush family. Keep stacking, keep learning, and I'll see you in the next video where we'll continue tracking these massive setups. Until then, stay bullish and remember, this is not financial advice. Always do your own research.